Hey everybody, Smart Silver Stacker here. Hope you're doing well. We've got to talk about the situation in the Middle East because it appears that we are now on a trajectory to a major regional conflict. And now, after the escalations that we have witnessed over the past days and weeks, it appears that major conflict will be unavoidable. At least that's how it looks to me. The most recent report now, we have the Iranian IRGC, the Revolutionary Guard Corps, deployed in Yemen to support Houthis. This is from the Robert Lansing Institute, and they tell us that commanders and advisors from Iran's elite Islamic Revolutionary Guard Corps on the ground in Yemen and playing a direct role in Houthi rebel attacks on commercial traffic in the Red Sea. The IRGC has stationed missile and drone trainers and operators in Yemen, as well as personnel providing tactical intelligence support to the Houthis. The IRGC, through its overseas Quds force, has also overseen the transfer to the Houthis of the attack drones, cruise missiles, and medium-range ballistic missiles used in a string of strikes on Red Sea and Israeli targets in recent weeks. So if we take this report at its face, clearly that is a sign, as the U.S. is striking targets within Yemen with airstrikes, that we are on the verge of a direct conflict between Western powers and Iran. Now, some of you out there may read this and think that this is simply propaganda designed to point the finger at Iran. But if that is the case, then at the end of the day, it's really the same thing, because if we're being conditioned for war with Iran, then what's the purpose for that? Well, it's because a war with Iran is on its way. So for all practical purposes for us, the end game is likely to be the same. I do see some folks tuning in the chat. Hello, welcome to the live stream. Please smash that like button if you are enjoying this content. Now today, despite these escalations in the Middle East, or perhaps because of them, we actually had the U.S. dollar index on the rise. A bit of a fear trade, perhaps, a flight into the perceived safety of the U.S. dollar. Also, the Fed has been pulling back on their promised rate cuts for 2024, kind of throwing a little bit of cold water on that narrative, jawboning the market, likely because we had a higher than expected inflation print for December. So they're trying to control that. And in today's market action in the prices metals, we saw this higher dollar index reflected in lower prices for both silver and gold. Now it looks like gold will hold above the support above 2,000 if you ask me. We'll have to wait and see. But ultimately, this pullback, again, sound like a broken record, kind of. You say it's an opportunity, but it really is, because if you imagine what is coming in the Middle East, you have to understand that one of the most inflationary endeavors a government can embark on is warfare. And that means they're going to need to borrow a lot of money to conduct this war. They're going to need to print a lot of money as the Fed monetizes all of that debt. And also, we are likely to witness further supply chain disruptions as a result of this conflict. We recently had Qatar announcing that they will no longer be sending liquid natural gas supplies through the Red Sea. Well, that's how Europe gets a lot of its natural gas, is from Qatar through the Suez Canal. So, there's going to be these supply chain disruptions. But let's talk a little bit more about what's going on right now, because we've got the U.S. striking Yemen Houthi-based forces, hitting an anti-ship missile. This is the third round of airstrikes on Yemen from the U.S. military, none of which, by the way, has been authorized by Congress. So, it's pretty interesting that the president seems to have taken it upon himself to conduct large-scale military operations without any congressional oversight. But that is what we are witnessing, and you can likely expect more of this. And not only is the U.S. launching airstrikes, but today Iran joined in and launched airstrikes on Pakistan, a strike to the consternation of the Pakistan government, who says this is an unprovoked strike. Now, Iran says they're launching these attacks at bases for the militant group Jaish al-Adl, which is a group they claim has been responsible for terrorist attacks within Iran's borders. Now, Pakistan says that there were civilian casualties and that these were unprovoked. So further destabilizing the region. And this is not only Pakistan which is being attacked by Iran, but targets within northern Iraq being hit with missiles as well. You can see here in this video footage from Al Jazeera, footage of a destroyed home struck by Iranian missiles. So Iran getting in on the airstrike game, further signs of regional instability. And I mean, if you follow the pattern here, one, yeah, we are to some extent being conditioned for a conflict here, and there is no sign of de-escalation. So, if I was a betting person, I would say that we are likely about to witness a large-scale military conflict in the Middle East, and we need to be getting prepared for that, because right now, markets are really not reflecting this yet. I mean, the price of crude oil is still just over $70. It was down today as well as the dollar was rising, and markets across the board were dropping as money flowed into the U.S. dollar. But the real safety trade when this conflict breaks out is not going to be the U.S. dollar. You know why? Because so many dollars have been printed. We've got, a $34 trillion national debt. You've still got a Fed balance sheet north of $7.7 trillion. It's going to be getting a lot bigger as this war and these global conflicts play out, because again, you got a U.S. economy. It's basically a house of cards. You got regional banks largely insolvent. You've got a commercial real estate crisis looming. It's an election year, and there's all these reasons the Fed's going to need to get in there and print money. And a conflict, a global war, would actually be a really great cover for the Fed to return to the printing presses, regardless of where inflation is at. If inflation keeps ticking up, it's going to be harder for them to print. But if they get a crisis, well, we know how the Fed likes to handle crises. And really, I mean, this conflict could be the end of global U.S. dollar hegemony. It could mean the loss of the dollar status as the world reserve currency. The BRICS nations are pursuing a policy of de-dollarization. You notice, these coalition forces that are conducting these airstrikes, there's not a BRICS nation among them. And the countries that are likely to be involved on the opposite side, I mean, you got Iran, they're now a member of BRICS. So we know how this is likely to play out, and whoever is victorious, it's not going to be good for the U.S. dollar. And that's why I am continuing to get into hard assets to prepare for this, assets which went on sale today. You've got a very unloved gold and silver market at the moment, folks. You've got, here you can see at SD Bullion, they've got 1 ounce American Silver Eagle coins on sale for $3.99 over spot. Think about how much premiums have come down in less than a year. Back in March of 2023, these Silver Eagle coins were trading for nearly 100% over the spot price, like a premium of, if the spot price is $25, you pay $50 for a Silver Eagle coin. Look how much that has come down. This is indicative of a bottoming out of demand for precious metals. And I thought to highlight this, I would pull up this comment here that I screenshotted from a recent video. I think it was yesterday's. So someone says, low blood pressure here, says, nothing will happen. Gallon of gas will be $100 and silver will be at $22. The next person, exactly, bro, I've been saying a loaf of bread will be $10 and silver still sub $25. Just wait. Someone else saying, yes, more please, silver sucks, never going up. Silver will scare you out or wear you out. Well, I'm not scared. I am happy for the diminished prices for precious metals. I am going to continue stacking them. And look, this kind of attitude, this kind of comments on a silver stacking channel is indicative of a bottom. Once folks who are interested in silver feel this way, imagine what the general public thinks. I mean, is anybody out there buying silver? The premiums on U.S. Silver Eagles would indicate that there is almost no interest in silver. To the extent that these folks are selling, I mean, once they've sold, it sounds like these people have already sold. There's no one left to sell. So, this is the time when you want to be buying assets, when people are leaving comments like this. It's when people start posting the moonshot comments, and that becomes the prevailing attitude. That's when you want to think about potentially selling your precious metals or swapping them into something else. When the price of silver goes up and the gold to silver ratio diminishes, that's when you want to start thinking about rotating into gold. One other thing I wanted to mention today is the gold backs. Look at the exchange rate for the gold backs now. $4.27 for a gold back. I think when I really seriously started talking about these on the channel, the exchange rate for a gold back was something like $3.50. Well, I mean, they've been doing pretty well for themselves along with the price of gold. I know there's a lot of haters for those out there. I thought I'd bring these up after seeing those negative comments regarding gold because, of course, gold backs, or rather those comments relating to silver, because gold backs, if, people are hating on silver, I'm sure that people are really having a negative sentiment around these, except the price continues to move up. And that's not just the exchange rate. I mean, that's the official exchange rate they list on goldback.com. But we can go to eBay here and just take a look at completed auctions, and you can see they're regularly selling for $4 to $5. So you got one here selling for $5. Here's a stack of 10 selling for $3.80 a piece. Here's a full set selling for $364. That comes out to about $4 a gold back. You've got one note here selling for over $5. 5 notes selling for $5 each here with this auction. So, you're going to want something to trade with, I believe, or at least carry some value over once the dollar is toast. And as I look at this conflict breaking out in the Middle East, you've got Iranian forces now deployed within Yemenis territory, which Yemenis, I don't know if that's what you say, but anyway, within Yemen's territory, as the U.S. is conducting airstrikes there, the possibilities for massive inflation, massive escalation here is very present, and it seems like markets are just ignoring this. I mean, do you think the dollar is really going to be a safe haven in this kind of global conflict? I don't believe so. Let me know what you think in the comments down below, but I think that the real safe havens are going to be gold, silver, tangible assets. My top assets right now I think would be 1 ounce gold coins, junk silver, silver eagles now that the premium has come down, and possibly some gold backs as well, to the extent that you want some highly divisible, highly fractional gold products to trade with once Mad Max is here. Because if oil spikes up because the Strait of Hormuz getting shut down, if oil spikes up to $150 a barrel, $200 a barrel, well, that's going to be a huge problem. That's going to mean inflation is going to run out of control. Not only are they going to be printing huge sums of money to fund this conflict, but the combination of an expanded supply of currency along with broken down supply chains could mean inflation is going to be a massive problem. And to those of you who say silver is, garbage, silver's not an inflation hedge, look, go talk to anybody in Venezuela or in Turkey or in Argentina. Go look at the price of silver and of gold in their currencies, and you let me know if it looks like silver is helping them out. I mean, right now, we have a bizarre situation where the dollar is the world's reserve currency, the Fed is hiking, but this is not financial advice. Keep that in mind. This is just me rambling, speculating. When I look at the U.S. national debt, $34 trillion, I mean, can we get it to 40? Can we get it to 50? Maybe. I mean, I think we're going to find out how high it can go because they're not going to stop spending borrowed money anytime soon. And a war is going to guarantee that they're going to be spending a lot more. Just the first quarter of fiscal year 2024, we've already racked up a $500 billion plus deficit, and that is in ostensibly peacetime. But wait until the conflict really breaks out here, and we're all going to see what inflation is really about. And I think that those of us who are holding hard, physical, tangible assets will be the, if not the benefactors of this, at least those who are insulated from the shocks as best as possible. Anyway, let me know what you think in the comments down below, folks. Thanks for watching. Stay safe and happy stacking, and get prepared because there's a lot of complacency out there right now, but I hope that it's not among those of you who are watching and who are paying attention to these things. Anyway, stay safe and happy stacking, everybody. I'll catch you next time.